So the Hang Seng is sitting with gains of 1.8%.
The positives in the number are margins have come in ahead of what the street was anticipating.
They're saying they could consider a rights issue, a QIP, or even a preferential issue.
We not stopped hiring, but we probably hired less than the number of people that left.
Nifty is hanging on to that 19,800 mark.
Large caps have become mid caps and mid caps have become small cap.
Firms which are considering a deal to acquire Aster DM's asset.
Kotak Securities has actually increased their target price on the stock.
Absolutely evenly balanced when it comes to the benchmark indices.
Well, the cabinet has approved royalty rates for the mining of 3 critical and strategic minerals.
Our poll indicated that the CPI could be 5.5% compared to 6.83 in the month of August.
A sole bidder, a potential bidder for Go First, and that is Jindal Power Limited.
Israel has now demarcated a zone around the border with Gaza, saying that anyone entering this area will be seen as indulging in criminal activity.
We are around that 19,811 mark.
That was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me are Surbhi Upadhyay and Nigel D'Souza. Guys, a very, very quiet session, right? Absolutely ranged.
Well, I guess if it stays quiet, it'll be good for the bulls. My worry is the next 60 minutes if the bears start getting a bit of an upper hand. Because as we can see from the screen right now, the problem in the market in the last 1 hour is absolute lack of leadership, right? IT is not working, banks are not working. I'm watching out for ITC and Reliance. Let's see if these big boys can hold up. Otherwise, could be a little problematic for the bulls.
And we've got important cues, right? Infi post-market as HCL Tech. So that pretty much sets and gives you the whole picture about IT. Then you've got the India CPI, US CPI inflation print. So important cues lined up.
Well, that's right. And we have the weekly expiry that plays out as well on the Nifty. And, if you're looking for a range, the high and the low of the day actually will be the broad range. Because, we went to around 19,844. And from there, we did see some bit of selling. So I think we should get that number up for you on the screen. And on the downside, we entered 19,773 odd. So that appears like a bit of a range as of now. If we end in this range, there's no worries. But if we happen to breach the high and the low of the day, then in fact we could be in business. You pull up a 2 strikes, the 19,800 put, that's fairly active. The premium has come down dramatically, telling you there's a lot of writing at that particular level. So just keep an eye out on that front. It's come down to only around 11 rupees. At the start of trade, it was around 44 rupees. So, that's in that vicinity of today's low, 19,770 approximately. On the upside, 19,844. Well, that's the one that's got defended today. And there's a fair bit of action at that 19,850 call. So the broad range will be the high and the low of the day. For the time being, both will be quite complacent, but let's see whether or not they get stumped on the wrong side.
No, absolutely, you said it. I'm watching out for that level as well, Nigel. We're just 30 points away from the day's low, so let's see if the bulls can defend that. One more point, guys, I wanted to talk about that if there's one sector that's doing well today, we should put that on the table. It's PSUs. A lot of that has to do with the mining stocks that Nigel will talk more about. They're all up and about. I mean, even the biggies like Coal India, the policy is for rare earths and, stocks like NMDC and GMDC. But in general, PSUs are doing well. Look at Power Grid, look at NTPC, look at Coal India. So once again, the PSU side of the market is fairly active, despite otherwise, things looking a little lackluster for the overall scheme of things. Let's get started then. We have, I think, now Mitesh with us. Let's see what strategies you can deploy as we're looking at this last 1 hour. Mitesh, good afternoon. So it's a little tricky, as Nigel pointed out. We're all watching out for the day's low very carefully. What would you do now?
Good afternoon. So I think it's been a very quiet day, but what is good is that the Bank Nifty has started to come into some kind of strength, despite the fact that the Nifty IT hasn't, really helped on the upside. Now, I've talked about the importance of Bank Nifty remaining above 44,400. That's happened during the day, but we haven't got past 44,700. In fact, the high for the day is 44,693. So I think the next level to be captured on the upside is 44,700. Once that happens, then I think the Bank Nifty should try for 45,000, 45,200 zone. So stay positive and, wait for the 44,700 mark to be taken out. I think that could add some fillip to the Nifty on the upside. And on the stock side, I have a buy on Jubilant Foods. I think after a few days of consolidation, the stock has come into an uptrend again. So buy here with a stop at 535, look for targets of 565, and a sell on HCL Tech, which has broken down today. So giving a negative call here, take a stop at about 1235, look for targets of 1190.
Okay. All right, Mitesh, thanks a lot for that. By the way, one stock that's moved to the low point of the day as we speak is Genus Power. Just pull up the intraday chart out there. That stock has taken a hard knock. You know, it's moved lower as we speak. And remember, that's rallied big time. So that's one stock out there. Tech Mahindra as well has slipped a little bit. And Torrent Power is another one. So there are a few stocks that have moved lower as we speak. But let's tell you about the space that's buzzing around. Let's explain to you why the government-owned mining companies are buzzing today. The cabinet has approved royalty rates for mining of 3 critical and strategic minerals. That's lithium, niobium, as well as rare earth elements. Now, the royalty rates have been fixed between 1 to around 3% of the selling price. The street, well, they're very, very happy about this because these royalty rates are lower, and unless specially mentioned, these minerals would otherwise be subject to around 12% rate of their average price. So the royalty rate is much lower. The cabinet has fixed these royalty rates lower as these minerals have assumed utmost importance in India's economic advancement and national security. Basically, these critical minerals are important as we move towards our carbon neutrality goals. Now, this also encourages indigenous mining and will also lead to reduction in imports and also setting up of related industries. You know, infrastructure projects get a bit of a boost, and in turn, employment generation as well will happen within the mining sector. So the government-owned mining names, well, they're flying away in trade today. But we need to keep in mind that this is just a stepping stone. The government is exploring on deposits available, the possible deposits available for strategic minerals. GMDC, well, they've been talking about this opportunity. They've been talking up this opportunity actually, but we're waiting for some fixed announcements on the rare earth opportunity. There's a long way to go from here now because we'll have to see exploration, then auctioning, then you'll get environment clearances, then you'll set up infrastructure, and finally there'll be commissioning and production. The street believes though that production could be a few years away, but for the time being though, all these stocks, they're up about in today's trading session. Whether you're looking at GMDC, looking at MOIL, MMTC, all of them up and above.
But, most of them are up, 5, 7, MOIL is up 10%.
Yeah.
MMTC is up 20%.
Yeah, it's amazing to see that stock up, and I'm just putting a few facts on the table. The market you're getting to that. Market capitalization is more than 10,000 crores on MMTC. And they've given on their website as well. Remember, this is the asset that owned that NINL, which got sold to the Tata Group. They are now one of India's largest international trading companies, but the street is still bidding it up, right? The government owns nearly 90% in the company. LIC owns another 2.3%. So the float in the market is less than 8%. And the margins in the last many quarters, it's actually negative. So they're not making operational profit as well. But that stock is up 20% as we speak. So just telling some of our viewers out there, their float is very, very limited out here. There appears, it could be low float that is pushing it up. Financials are not supporting as of now, but if there is an opportunity, we'll have to unearth it and see how it plays out. But the stock has just moved one way. So just we need to alert our viewers, just, beware. And these are the facts that we're putting on the table. Deven Choksi, the MD at DR Choksi FinServ, joins us on the show. Hi, Deven. Good afternoon. Thanks so much for joining in. What do you make of these mining names? The stocks are being bid up, but the opportunity actually is a few years away. What do you think?
Yeah, Nigel. Good afternoon. Well, obviously, I think the market is basically reading all the news and counting on the possibilities. However, I think no one looks into the financials of these companies. If you look into the financials, probably you realize that I think they have been inconsistent performers in past. And I think you can't have the sustainable performance either coming from these companies. Now, given the kind of possibility that we are talking about, by way of fixing the royalty rate, by way of, I think, giving the kind of opportunity for these mining companies to produce, by the time they start producing and start giving the results to the investors, I think the valuations have already started discounting future far in advance. So even though I believe that I think there is a good potential, I think I would like to see the numbers catching up on those potential. Till that point of time, I think buying based only on the announcement and the stories will probably not work good for the portfolio. So we'll wait and see till the time I think we see actual production happening and then possibly enter into this.
Well, the sector which is dragging its feet today is IT. The Nifty IT index has moved to the day's low. It's down 1.5%. And it's not just TCS. In fact, the other IT names are selling off even more. So Tech Mahindra is down close to about 3%. HCL Tech, ahead of numbers, is down 2.2%. And Infosys, which was flat in the morning, is now down close to about 1.5%. So clearly there is some nervousness which is rubbed off from TCS. So to quickly summarize, because we've been talking about TCS, since morning, the miss is on the top line. The company's revenues declined for the first time in 13 quarters. The street expectation was, or given the run-up that we had in the stock price, the expectation was the management commentary will indicate some green shoots, some demand recovery. But no matter how much you try to quiz the management about the second half of the year being better than the first half of the year, we even asked them that even if you just purely execute the deals that you won, won't second half look better than the first half? But we still didn't manage to get any comment from the company about it. And that's what's worried the street to some extent, that there is no comfort provided by the street about a demand recovery despite very large deals. And now, for even a company like TCS, Street is estimating that the growth this year is going to be in low to mid-single digits. So Jefferies is anticipating a 4.3% top-line growth. For Citi, the growth forecast is 3.5% on the top line. So it's not too different from what Infi had guided, which is 1 to 3.5%. So basically, at least for the large caps, it appears this is going to be a low to mid-single digit kind of year for the company. Yes, the deal wins are strong, but the stocks had already reacted to the deal wins as and when they were announced. So every time we had the large deal win announcement, whether it was JLR for TCS or the Liberty Group for Infosys, the Verizon deal for HCL Tech, the stocks had run up. So that as a trigger was probably already in the price. And today, the market is reacting to the revenue performance. But the big event to watch will be Infi and HCL Tech. And then we'll get some, greater clarity. Devin, how do you expect, IT to play out, say, in the next 3 months from here on till the next earnings season?
So, Rima, I think what further negatives can it bring? I think that is a question that one is asking. You have uncertainty about execution, but at the same time, you have certainty about getting the orders pipeline, I think, in place. Largely because of the fact that the orders are delayed, but they are not denied. So importantly, the companies are reporting the higher amount of order inflows. And that gives the promise that in subsequent period of time, you are likely to see the execution on a sustainable basis. In my viewpoint, I think they have also in the current year, Infosys, I think in this current quarter, and sorry, TCS in the current quarter, has actually been able to maintain even the margins, I think, if not anything else. I think a similar would be the situation with the other companies too. So if I think there are no major disappointment, then possibly I think one would start counting on the possibilities where exactly the companies would start executing higher orders and start getting into better revenue. In my viewpoint, I think the current times, I think, are uncertain, but at the same time, it gives a lot of opportunity to investors to buy into. Corrective downside in IT should be bought into. That is our view. Maybe I think if sharper correction comes in, there would be enough amount of buyers in the market, given the kind of cash that they have in the portfolio.
That is the take on IT. Got that, Devin. Thanks for that opinion. By the way, if you look at the market, today, in terms of the upside, beyond some of the metal names that we've discussed, there are other PSUs, as I mentioned. There's Coal India, there's NTPC, even Power Grid is up and about. Devin, we spoke about this whole, metals mania that's playing out thanks to some of these policy moves. But what about the other PSU stocks? It's been a tremendous rally. Would you advise buying anything afresh? I'm talking about PSUs, ex of PSU banks.
Yeah, Survi, good afternoon. Well, I think we are very closely monitoring the improvement in the financial results of these public sector companies. In most of the companies, I think the results up till now have been, I think, far more inconsistent and not up to the mark, even though they have always had a good amount of potential for performance. Including BAIL, I think, where we are basically wanting to see higher reporting of better numbers. I would like to see, I think, how exactly they would sustain on this particular order inflows, how we'd like to see, I think, how they are likely to execute, I think, some of these numbers in a respective period. I think that one would like to see. If till that point of time it start producing sustainable performance, giving them the premium valuation would possibly, I think, hurt the portfolios most. We are very closely watching this space, and probably, I think, at a corrective downside, one can look into. But as I always believe that PSUs are great businesses, but not so great for investors in their portfolio to generate the return. So we want to be very careful about adding some stocks into the portfolio, especially at higher valuations.
Okay, fair point. Devin, stay on. We'll have some more questions for you. Need to take a very quick break. We'll come back on the other side. The conversation continues. And also, in a while from now, we will have Abhiram El Swarupu, Head India Equity at BNP Paribas, joining in on the show as well. Welcome back. You're with us on Closing Bell. Let's look at some stocks that have actually worked well. We've already discussed the PSU theme in a lot of detail. The other one that's managed to find some traction today is Maruti. Maruti is up about 1.5%. The company yesterday declared to the exchanges that it will be looking at exporting huge volumes of its Jimny to international markets, to a lot of other emerging markets in Latin America, Africa, etc. Stocks up. Stocks had a good week so far. It's up about 2.5% for the week. It's had a good year. Maruti's given you about 25% in 2023. So it's been a good ride, or a good drive, should I say. Devin, what's your thought? Do you like Maruti at 10,500? Devin? I think you're on mute, Devin. Can't hear you. Ah, okay.
I'm sorry. Well, I think the stock has already performed on the price front, counting all the possibilities, including of the new launches that the company has made. And I think given this news of exporting the new SUV in May, I think is definitely sounding positive. But whether it is going to create an exceptionally high amount of revenue immediately, I think answer would be no. Maybe I think the things are looking positive for Maruti, given the kind of higher amount of offtake and given the kind of early festive season which has started for them. I believe that I think the company will continue to find the tailwind. However, I think the valuation would always remain, I think, one question mark. Till the time we will have, I think, corrected price, probably I think you are not seeing the opportunity from the current price to make larger amount of gain out of this company. And that could be true for some of the other auto companies, true, where I think the prices have already moved up, and probably I think they are at this point of time quoting at counting the possibilities of not only current year but I think the next years too. As a result of which, any corrective downside, if it all comes, that will be meaningful to buy into the portfolio some of the good quality passenger vehicle companies and two-wheeler companies.
Pull up a 3-month chart of Reliance Industries. And Reliance Industries has been a big underperformer. The 52-week high on Reliance Industries was on 19th July. The stock hit a level of 2,856. And now the stock is down to 2,350, which means a fall of 500 points. It's 15% lower. And if you compare it with its 52-week high, the stock is down close to about 18%. David, what's the reason for this kind of underperformance in the last 3 months?
Well, I think more than anything, fundamental reasons, I think it's more to do with the market technicals. Currently, the shift has already happened from some of the large cap companies, and they have gone and invested money into the mid cap and small cap companies where probably the returns have been faster and smarter. Those ETFs who are coming through the FPI route, I think they are basically finding some of the large cap companies a home ground to short, because the domestic investors are not putting larger amount of money, increasing the weight in their portfolio in these large cap companies. As such, I think the amount of trading activities through derivative market is on a higher side into these companies compared to the cash market volume, which is remaining about 5% of the total market volume. I think these are some of the market technicals which are hurting some of the large cap companies which are otherwise having reasonably strong amount of growth prospects, better valuations due to the corrected prices, and I think extraordinary amount of opportunity, particularly because I think the visibility created for next 3 to 5 years in their business is extraordinarily strong, including for Reliance. So I think the technicals are possibly again going against. The fundamentals remain absolutely strong and convincing. And that could be the time for investors to buy into the stock. As such, Reliance stock, I think, would probably give you faster return after every 3.5 to 4 years of lull. So that possibly the time comes in somewhere in 2024. If those who want to perfect, I think, the timing, they may also probably find a good merit to buy now and reap the benefit in 2024. That is how I think one can look at the technical as well.
Sorry to get back to the point. You say Reliance does well every 3.5, 4 years. So it's currently going through a 3.5-year lull. And then next year in FY24, it comes to an end and then the stock does well.
That's right. And I think it can possibly synchronize along with the new portfolio of investment that they are making into renewables. Somewhere in 24-25, you are likely to see first announcement of commercial success with the new portfolio of products I think that they are going to be launching in the renewable segment. So it is at that point of time, possibly you will see the sharper rise, along with I think the unlocking of the valuations coming through Geo platform in the retail, which is likely in 24-25. So that is the time when you should be seeing the unlocking of the value and probably I think the rise in the price.
Okay, all right, Deven. Thanks so much for stopping by and helping us out with analysis on all those names. Wishing you a good afternoon and a better evening ahead as well. Well, let's move on then. We have Abhiram Eliswarupu, the head India equity at BNP Paribas, who joins us on the show. Hi, Abhiram. Good afternoon. Thanks so much for joining in. Well, as you join us, the IT index has moved to the low point of the day. You have stocks like Tech Mahindra, Infosys, both of them are slipping a little bit. But I believe that you're looking at some of these IT services names and you're saying the ones that have a good order book, you prefer them. How would you approach this lull that we're seeing? Would you buy into the dip?
Well, let's look at the space overall year to date. IT has actually outperformed marginally. And this came after a pretty big sharp run-up since the last results. Now, going ahead, really, the crux of the matter is that execution has been slow. client decision making has not been as good as expected, and that was what was seen in the results that have come out so far. But I think investors are also focusing on the order book. And order books have generally been healthy, and they're only getting healthier. In fact, in the past month or so, you've seen some very large deal announcements. Now, the other thing to bear in mind here is that, and after all, this is a global sector, is that rates are probably peaking globally at the moment. And as you start to see yields come off in the US and elsewhere, I suspect that macro tailwind will also tie in back into better decision making and hence in the stock prices. So in a nutshell, we still remain constructive on the space from a longer term perspective. I mean, there are a lot of long term tailwinds in this, you see, starting from AI to whatnot. And so we are positive. A near term lull is not ruled out.
Okay, near-term lull. Let's see if any of the other companies will say anything different, will add a little bit of excitement after TCS's rather dull commentary and outlook. Abhiram, so okay, let's try and focus on brighter things. We are at the cusp of the festive season. And I think early channel checks indicate that at least retailers, whether it's autos, overall retailers, are really expecting a good showing. What's your sense on the consumer discretionary space? Do you like it?
Yes, we do like discretionaries. In fact, we ourselves conducted a series of industry checks over the past month or so. And what seems to be coming out of that, at least for me, is that B2C brands are making a comeback. So you start to see that in washing machine, air conditioner, and those kind of sales. And therefore, some of the picks that we have across a broader theme that we call Affluent India actually involves 2 or 3 large consumer discretionary names. Now, the festive season is also very critical for the auto space. But here again, I think we're getting divergent commentary. While the Affluent India is continuing to spend, and that includes four-wheelers and higher-end bikes, what we feel is that demand at the entry level may still remain muted. I mean, there are 2 factors, festive season aside. There's also the accumulated inflation that's come in. Commodity prices have again started to rise. And also incomes at the lower end of the chain have not really picked up as expected. And therefore, you continue to see this K-shaped recovery that we've seen over the past, let's say, not just 1 year, but maybe even longer. And therefore, autos being the second festive thing, I'd focus much more on four-wheelers in that space.
So in consumer discretionary, you like four-wheeler auto names, you like some washing machines, some AC players. What about jewelry companies, apparel, footwear, QSR? Where do you stand on them, and what do your channel checks suggest for the demand trends for each of these segments?
Yes, in fact, one of the recent pieces that our team put out was on Affluent India, and they kind of concluded from that the income and the tax brackets have significantly changed over the past decade. In fact, the past 4 or 5 years as well. And what we're seeing here is that large chunks of population are actually jumping up in the tax brackets much faster than what they expected. And they kind of identified this and brought it down to about 30-35 million Indian households that they think are disproportionately spending on consumer items, especially the discretionary side. In fact, all the sub areas that you mentioned, starting from footwear to jewelry to even financial services products, feature in our list of preferred names. Now, I think there's a little bit of a question there in QSR where we actually saying maybe some parts of QSR do better than the others. So that's one space where we're kind of a little bit more careful and picky in the stock choices. But otherwise, all these themes fall pretty much into a long-term thesis that we have on India. Now, out here, I think it'd be pertinent to mention that the market itself is trading at 20 times forward earnings. It's not the greatest time to put in fresh money, if you ask me. And I think the last time I was on the show, I did mention that large caps are probably better off than mid and small caps. And that was also to do with building in certain safety in the portfolio. So when we talk about Affluent India, we're talking from a long term, that's a 3 to 5 year perspective rather than a 3 to 6 month view.
All right, Abhiram, what about the themes that have worked, defense and railway? Continue to like that?
Yes, we still like them. Now, I think again there a little bit of caution comes in because now we're also headed into election season. We have a 3 to 6 month window when you normally tend to see a little bit of a slowdown in activity. So industrials is not the hottest space for us at the time, for the time being at least. We're focusing much more on consumer-facing sectors for now, and that, by the way, includes also private banks, which is also in our view actually a retail play more than anything else.
Okay, so that's on banks. Overall, Abhiram, if you could just expand on how are you approaching financials? What parts of it are you liking? There's this one constant debate about how we'll see probably margins compressed. So are you opting for, say, NBFCs or, I don't know, asset managers? What's your entire strategy on BFSI?
I mean, we do think actually that this whole margin concern is a bit overdone, and some of the math that we did suggest that it's not going to really impact our estimates in a big way. But if you step back and see, large banks have been the biggest underperformers year to date, at least the index by itself, probably the biggest underperformer year to date. And if I'm here trying to get a little more cautious on the market and talk about how we should bring in more safety into the portfolio, I'd actually look at the ones that have underperformed the most. Private banks are in a good space. In fact, they offer value, at least relative value. And one of the things that strikes me is that deposit growth has been very healthy, 12, 13% growth. And that in itself is fuel for further growth, which means that private banks could report upwards of 15% growth, maybe close to 20%, if not more. And so therefore, this earnings season especially, I'd be focusing a lot more on the private banks. The other thing that I kind of mentioned in the past as well is insurance. Insurance companies have done well in the past 6 months or so, especially after all the fears of tax or regulatory related issues went away. But even there, you've seen kind of very divergent performances between the various insurance companies. And the underperformers in that rally are actually the ones we're focusing on at the moment.
Okay, looking at the underperformers in the insurance space, even LIC, or are you looking at the private sector insurance companies which haven't performed?
Well, at the moment, we're focusing on the top 2, 3 maybe names on the insurance side.
Okay, but the top one includes LIC as well, right? In size. So that's also a stock that you're looking at.
Yeah.
All right.
But
do you want to quickly...
specific, but yeah.
Okay.
Interesting.
Do you want to also tell us some new, fresh ideas that you're looking at BNP Paribas? Any reports which you've come out where you've initiated coverage on some stocks in the last 2 months?
Well, I think the biggest 2 things that we've been going out with is number one, the affluent India aspect, which I mentioned to you already. And the second bit is on consumer durables. And going into the festive season, especially, I think is a great time to start looking at some of these names. These are the 2 ideas that we're running with. From a macro perspective, though, what our teams around the world are talking about are about rates peaking globally. And especially if you see the minutes from the FOMC as well, now, what it does suggest is that monetary conditions are already seen as fairly tight, and therefore the chances of further hike anywhere is looking increasingly unlikely. In fact, you'll probably start to see rates come off globally, and therefore that could actually aid bonds and less so equities. So going into the rest of the year, actually, I'd be a little more cautious if you ask me. And one of the things that I've also kind of felt is that index targets have already been hit. We're still not at the end of the year. And this is usually an indication that you want to go a little slow. So I think safety is really what we should be focusing on for the next 2 to 3 months, and then take it from the new year after that.
Okay, that's sane advice, sane thoughts. And I think sanity is always good to have, right? It's been quite a year for the market. Thank you very much, Abhiram, for joining in. Good chatting with you as always. We look forward to the next one. You have a good rest of the day. We'll take a break on that note with the news that we have just rounded up close to 3 p.m. There's not been much of a move on banks just yet. We'll get up the bank Nifty for you. It's still flattish, 0.1, 0.2% up. The Nifty, however, continues to cool off, 26 points lower. Banks are very range bound, at least for the time being. We'll take that break, come back, keep tracking the 3 p.m. moves. And of course, we'll also tell you what's happening in dealing rooms. What is the chatter like today? Nimesh joins in.
Welcome back. Well, we've seen a bit of a dip. We're moving to the low point of the day as we speak. Eicher Motors has slipped a little bit. UPL as well has moved a little bit lower in the last few minutes. So the markets are retesting the low point of the day yet again. Good time to move to our special segment, D-Street Chatter. Nimesh joins us to tell us what's he picking up in Dealing Room Chatter. Hey, Nimesh. All right, we'll go to Nimesh in just a bit. For the time being, I think he's just getting mic'd back on. The markets, well, we had slipped a little bit, as I said, a little bit, let's focus on a couple of names. HUL is a stock, actually, that was trading in the green. That seems to have lost its way. Yesterday, we were highlighting that that's one stock, year to date, actually, is a relative underperformer. So HUL, again, has pulled back a little bit. But I believe Nimesh is with us. Nimesh, we were asking you, what are you picking up in Dealing Room Chatter?
Hi, Nigel. It's a bit of a subdued day of trade. Even on the volumes, it's on the lower side. The institutional participation is also on the lower side. So the flows are quite mixed, but also muted as well from the larger FIs. That's the overall feedback. I guess the sector of the day clearly is PSUs. They're back in the focus. All the power PSUs are doing good today. And there is a lot of momentum as well across the PSU stocks, whether it's power names, even for that matter, the likes of GMDCs of the world. So that's the space which is clearly buzzing in today's trade. I guess from a broader market point of view, the earnings are going to be quite important, and that's showing up. Like we saw a lot of IT under pressure today on the back of weak numbers from TCS. But the feedback is maybe watch out for Infosys and a couple of other large caps as well, because that will set the trend for IT names as well. And even from a market perspective, the overall feedback is at least the first half of the earnings season is going to be quite important for this series. So that is something to track. But broadly, after a long time, it's like quite subdued, and even the institutional activity is on the lower side today.
Okay, got that. I'm actually just checking some stocks. By the way, some of these asset managers are doing well today. Very quiet day for mid-caps, but stocks relating to the mutual fund fraternity. Nippon Life is one. There's CAMS also, which is up and about. So interesting. Maybe it's after the mutual fund data. Anyway, Nimesh, what are you picking up in terms of stock chatter today?
Well, for a change, while the volume is on the lower side, there are a lot of blocks into mid-cap and small-cap names. So I just wanted to highlight that. In terms of individual names, the first stock in my list is Eureka Forbes. There was a small block, almost 3 lakh shares, got changed hands. I believe, a leading domestic AIF was a buyer in today's block deal, and maybe the supply may still continue. That's the overall feedback. So that's the first stock. The second stock is GAIL. I just spoke about, the entire PSU basket buzzing in trade. GAIL stands out, not in the back of strong buy flows, but there is also an anticipation of some corporate development in GAIL very soon. So that's the reason why that stock is buzzing in trade today. The third stock is Power Mac. If you look at this week's chart, it's been quite soft, down 4%. But this year, Y2D, the stock is almost gained 100%. And there is an indication that maybe the company is looking to raise funds via QIP very soon. So that is something to track in Power Mac. And the last one is Samvardhana Motherson. After a long time, some bit of buying traction seems to be back in this stock as well. The flows are strong at a leading FI. This looks like some institutional activity or the interest is back in this particular stock. So expect high delivery volumes in today's trade today.
Okay, thank you very much, Nimesh, for highlighting interesting list as always. It's still largely all those, mining stocks which are leading from the front. It's otherwise been a very, very quiet session. So MMTC still up 20%, MOIL 9%, NMDC, GMDC holding up with a gain of about 5 to 6%. So that's really where the action is. Mitesh is back with us to give us a few BTST calls for a reverse trade tomorrow. Mitesh, flat on the index. Any thoughts on the day so far? First.
Well, I think the day is very subdued, and I've highlighted that the next few days could be determined by the Bank Nifty movement. Now it started outperforming, but that strength isn't enough. I would still want to see the Bank Nifty get past 44,700, and I think that could add some fillip and a strength to the Nifty on the upside. And I think once that happens, we'll look for further index trades. But for the timing, trading is more stock specific. So I have a BTST on Exide Industries, which is a BTST with a stop at 262 for targets of around 269 on the upside, and that's for tomorrow. And the other stock on the list is a BTST on Bandhan Bank with a stop at about 249.5 for targets of 255.
Okay, all right. Thanks a lot for that, Mitesh. Well, the markets, we're in that range. We have pulled back a little bit. We were down 35 points. Now we're down, I think, around 5 points. So the last few minutes, there is a bit of a pullback. What's pullback actually? I think Titan has moved to the high point of the day. HDFC Bank, that's the big one. Let's take a split screen out there. We should pull up HDFC Bank actually, and maybe we pull up the Nifty. And HDFC Bank has decided to move back to the high point of the day, which has helped the Nifty recover. We're down 30 points. I think 20 points out of that, the recovery was because of HDFC Bank currently moving to the high point of the day. And I'll tell you what, if this one can find its form, well, that can help the Nifty move back towards around 20,000 odd, because it's been the big underperformer year to date, the last couple of months, last 2 years as well. And if that could find its form, that's going to be the important one. Just take a look at that. The last spike that is being on the Nifty is perfectly in line with what HDFC Bank has done, currently moving to the high point of the day. And the second day running, actually, HDFC Bank is trying to find some bit of support at lower levels and moving up.
Actually, both the underperformers, Reliance and HDFC Bank, they both have started performing well. And HDFC Bank reports numbers on Sunday. And if you remember, their business update in Q2, which it reported some time back, was actually pretty strong, and the stock had done well post that. And plus, the CEO announced some organizational restructuring, some changes at the top level. So it looks like he's flexing his muscles now.
Yeah, let's hope, because, valuations are in support, but otherwise the street is doubting with regard to the return ratios, with regard to the near-term NIMs, as well as on such a large base, can they continue to grow on those mid-teens to high teens? So for the time being, the market will be happy, and the bulls will be happy, actually, that HDFC Bank has finally perked up, moving to the high point of the day. We'll slip into a short break, but as we do that, here's a glimpse from CNBC-TV18's digital podcast show, My Way, with Ankit Nagori, the founder of Cure Foods. You can watch the full episode on our YouTube channel.
The whole food tech space, right, has picked up in a big way. Now we have, 3 million orders a day across the ecosystem. Where do you see the next million customers come from?
Yeah, so if you look at the journey of food tech in the country, Sonia, it started off with discount. A lot of people acquired customers. Like many online platforms, the first movers were people who were deal seekers. They said, okay, same pizza which you dine out, and pay X rupees, you're getting a 30% discount, and people start ordering in. Real customers came in who were ordering in for a real use case, like not having enough time to cook, or having guests at home and they needed to cook. The real bump up came, of course, during the pandemic. Zomato, Swiggy, or Domino's, all of these platforms became very big. And that's where the real step jump happened. Pandemic took it to 2 million plus orders. I think a very fast emerging segment are people who just don't want to cook at all. And they figure out that, cooking is a really, really tough thing. You have to have a place inside the house, which is dedicated to cooking. Of course, kitchen is called. Then you have to set up an ecosystem of cooks, or you cook yourself, of course. You have to get raw material, grocery on a daily basis. It is tough. And if you're a double income, no kids family, or you're even a single living in a city like Bangalore, you wouldn't want to spend your time on that. If I look at the total number of consumers in the food ecosystem, my sense is about 3 to 4 crore people have ordered online at least once, when you talk about food. And out of them, at least 1 crore people are there who order every quarter. So that adds up to a number where, in top 6 cities, 1 crore people are ordering on a regular basis. Ordering food online is their top of their mind. But if you have to, add the next million consumers a day who order very, very frequently, you have to get at least 1 to 2 million consumers who are on subscription-like platforms. So I feel that the total universe of people eating out right now is about 3 crore. Who have ordered at least once. This number can grow to 3.5 to 4 crores, but the next 50 lakh to 1 crore people have to be the ones who are, eating more frequently.
Welcome back. Both Infosys and HCL Tech will be reporting numbers. Ahead of that, there is some softness which you can see in the stock. To quickly run you through the big numbers, for HCL Tech, after 2 quarters of a revenue decline, this quarter there is expected to be a top-line growth. 1.3% is the street estimate. It will be partly driven by an acquisition called ASAP that the company did. Margins are likely to expand to 17.5%. Here the key is, will there be any change in the guidance? 6 to 8% is the current top-line guidance. The bottom-line guidance is 18 to 19%. The company, like others, has announced some large deals. Verizon was that $2 billion deal which the company announced. So those are the big numbers. Top-line revenue growth 1.3%, some margin expansion to 17.5%, and FY24 guidance. Jefferies does believe that there is a possibility the company could guide closer to the bottom end of the guidance. Now, when it comes to Infosys, is a stock which has done very well. It's announced large deals in Q2 because of which the stock has outperformed. Now, on the numbers, we're expecting a 1% revenue growth. But remember, its peer TCS reported a flat top-line growth. So 1% is what the street is anticipating. FY24 guidance is likely to remain unchanged. The street is going to be tracking, one, all the leadership changes, the exits that have taken place. 2, the profitability dynamics of the mega deals and how these deals are going to ramp up, whether these large deals will actually help the company come closer to the top end of the revenue guidance. So those are some factors that the street will be watching. Amrish Baliga is with us on the show. Amrish, would you buy the dip on IT names or you'll stay away?
For the time being, I'll stay away because, again, Q2, I expect that to be slightly flat to a bit negative. Guidance also could be an issue. It could be at the lower end. So I think there is still problems for the IT space, at least for a quarter or two. So possibly I'll wait till December, January to actually, start picking up. But till then, I see some pressure as far as the IT stocks are concerned. And overall, as far as the market also is concerned, I think it's a time that we should see a decent correction. So along with that, you'll see IT stocks also coming down.
All right. Hi, Amrish. Good afternoon. Normally, you give us a pick, and I believe this time around, you're looking at one from the finance space. Which one is it?
M&M Finance is a stock. So it's a leading vehicle finance company in rural and semi-urban locations where they have a very strong moat. Incremental growth is coming from new geographies, new product offerings like SME loans, loan against property and digital. And pre-owned vehicle financing also is increasing. And additionally, the traditional market in auto as well as UV segment is improving for them. The CEO designate, Mr. Revello, takes over in April 2024, but he's already implementing those aggressive strategies, which I think should start giving dividends from FY25 onwards. So next 2 years, expecting the AUM to double with NIMs of about 7.5%. And if you look at the last 6 months, the numbers which have already been declared by them. Currently we have seen a 20% growth till September. So Q2 earnings should be decent. And expected EPS for FY25 is about 24. And I'm looking at a target price of 350, which is about 1.5 times adjusted book value.
Okay, 350 is the target price for you for M&M Finance. Got that, Amrish. By the way, take a look at some stocks. Some very interesting moves in the broader markets taking place. Check out Linde India. Not sure if there's a news point or something over here, but big surge. There's a huge price surge, actually, 14%. Linde India. It's a global company and deals with the industrial gases. Stock's been a good mover, about 100% in the last 1 year. And that's a big move coming on Linde today. Then, as I was saying, some of the other names include CAMS, CDSL, the depository. That's also about 6% or so. And PVR Inox seems to be getting all set for the weekend. There's about a 4% up move on PVR as well. So interesting movers and shakers in the mid-cap market, though the index is flat. But we have some interesting names. IGL as well, count that in, about 4% up. Amrish, just very quickly, any interest in PVR Inox?
PVR Inox from a short-term perspective, yes, because we'll have some more releases happening, and going by the way the new releases had performed in the last 2-3 months, expect the business to be good for PVR. So I think from a short-term angle, I think one could look at some amount of bump up, maybe another 10-12% bump up from here.
All right, Amrish, I request you to stay with us. We're just going to slip into a short break. You come back, we'll close the market, and we'll also get a couple of more comments from you. Welcome back. Well, we were talking about that Genius Power stock being under some pressure. That suddenly saw some buying interest and it's moved to the high point of the day. And GSPL as well, that's the other stock that's moved higher as we speak. So a couple of stocks, well, they're moving higher. Amrish, before we let you go, everyone's eyes are on this India-Pakistan game. And we had the management of Indian hotels. They were telling us about the rates shooting up. But you liked the stock earlier as well. How are you placed now on Indian hotels?
No, I'm still quite bullish on that, and just not only because of this event. This is a short-term sort of a bump up. But then if you look at the ARRs, the way they have moved up and stabilized, and this has happened after nearly 10 years. The last decade, we had seen the ARRs around the same levels. They were not moving up. But finally, they have moved up decently well, and they're staying at those levels. So I think that's extremely positive for the hotel space overall, just on Indian hotels. But then Indian hotels is the best pick in that space for me.
Amrish, counting down to the close. Thank you very much for joining in. It looks like it's going to be a very, very flat close. The Nifty is just shy of that 19,800. We spent a greater part of the trading session well above 19,800. But in the last 1 hour, we did see the bit of softness. And it looks like the close could be below that key level. 0.05, 0.09% lower on the benchmark indices. Midcaps in the green, but off from the session highs. To take you through the big losers, well, it's IT. The Nifty IT index was down 1.7%. Apart from that, you had the Realty and PSU banking index under pressure. The IT names which were weak, in fact, the top 3 losers are the IT names on the Nifty. So Tech Mahindra, Infosys and TCS post numbers, slipping close to about 2.5%. Other than that, Apollo Hospitals gave up some ground. Cipla weak, UPL down 1.2%. The gainers list includes BPCL. You've got Maruti Suzuki there, Coal India, Power Grid. Some of these power names were quite active. NTPC too, surging nearly 1%.
Well, if you're talking about these stocks like BPCL, Coal India, let's just expand that. It's all PSUs once again who had a great session. Of course, starting with a lot of the stocks where the market feels there's going to be a benefit because of this new royalty policy, where the royalty outgo would be lower when it comes to rare earths and strategic minerals. So MMTC, GMDC, NMDC, these were the high flyers, 5-6% up on most of these stocks. MMTC is going home with about a 19% up move as the day plays out. And even others, I mean, Nalco, some of the other metal stocks also did fairly well. Aside of that, if I talk about the mid-cap universe, then very, very quiet. There were more advancing stocks than declining stocks. That is a fact. But then you have to really pick for some of the winners out there. And the stocks that we just named, Linde India, for instance, 14% on the upside. Bosch, some of these MNCs have done pretty okay today. Hitachi Energy, a good day for some of the MNC counters. And beyond that, as we said, there is Nippon Life, the asset manager, there is CAMS, there is CDSL. These were some of the names. Serra Sanitary, these were some of the names that stood out in the form of the gainers today. Aster, we must talk about Aster. There's so much of buzz and M&A action surrounding that one company. All kinds of names fly around every day, in the news. And that kept that stock excited. So there we have it. Nigel, I mean, the overall range for the Nifty is hardly 65, 70 points. It's been that narrow a day.
Well, that's right. Towards the end of trade, actually, we had some comments coming from the oil minister with regard to the city gas distribution companies. And you had, stocks like Gujarat Gas that moved up a little bit. Mahanagar Gas as well goes on with some gains. GAIL as well, the stock is going on with a gain of close to around 5%. And 2% of that move came in the final hour itself. GSPL as well. That's another stock that moved up. Just one word of caution about MMTC. The float is very, very low. Only around 7.5% in the open market. And I'll tell you one more data point, guys. 10, 12 years ago, MMTC, the float was even lower. That time it was less than 1% in the market. And the stock price was what? Any idea?
I won't guess.
More than 1,000 rupees at that point of time. So there's a low float factor that plays out. Currently, the price is around 70 rupees.
It didn't go through a split or...
No, it's one way because there was only less than 1% in the market. When they came to do, government came to do an OFS, it was done at a sharp discount, 210 rupees if I remember correctly. And from there, the stock has gone one way. And, as of now, it's up 20%. So very lucky.